In this particular video, there is an emphasis on proximity group location patterns, and I wanted to show you one that is a little bit different, but there's a lot of common issues associated with this and others that, in this case, gap down. The symbol that I'm in is GGAL, and this particular day with the red candle where the green vertical line is, as you can see from over on the data window on the right, is June 20th, 2017. And to start here in the trend chart, we have a trend red down on just after the peak, and trend green is going up. So we have a case of divergence, obviously, and this particular thing is classic. Keep in mind, now when I say classic, what I mean, it's classic in that it's a TOC pattern at the top of a peak, which would indicate that we're heading into a downtrend. Now, this pattern itself has proven to be existent in both gaps up and gaps down. However, it typically, when it's above zero, and keep in mind this is a general way to look at it. It's not always true. You have to verify it with the conditions and the supporting evidence. But typically when red and green are above zero, it goes down, and typically when red and green in this shape, when it's under zero and mixed into the trend trio lines, then it typically goes up. So it's a case of where it appears in this particular shape, specifically now just trend red and trend green. So, and as you can see, the trend trio is going up, but the other two groups, power orange and green, are going down, and power and swing red and green are going down. This again, I was talking about the location issues, and if you back the vertical line up one day and put it here, this is a classic case of power Zion above orange, and the power 4 group actually red as well, power 5, or I guess you'd think of it as the 5 lines, but not the power 5. It's power red is the power 6. So, and if you haven't heard it discussed before, the power 4 is the blue, pink, white, and yellow lines, and if you take away the yellow, you have the power 3. If you add the Zion to the power 4, you have what we would call the power 5 lines, and when red is added to the power 5 lines, then we have the power 6. And you can have gaps up and down with the power 6 all above orange or all under orange, or the power 5 all above orange or all under orange. There's several location patterns that we deal with that we see continuously repeat themselves in their location area. This particular one here, we have a peak with power Zion on this vertical line now. Keep in mind, I backed it up one day to the very peak with Zion above orange and all the other lines under orange. What happens on this day is let me back up. On this day right here, we have a classic sky touch. And this is 3 days after, if we go down here, we had our crossover day. This is the day that the trend red crossed over trend green. This day can be a gap up when you're just looking at trend red and green, because it qualifies as a crossover sky touch day. That would be the 0 day or the crossover day. Then you have day 1 in a sky touch, day 2 in a sky touch, and day 3 in a sky touch. And we don't look beyond 3 days or consider anything beyond 3 days after the crossover as a sky touch condition. And so this here is technically a sky touch, but nothing happens the next day, and logically so based on the indicators. But this day is the gap down day, and the green vertical line has the most prominent element inside of this whole thing is the low angles, both up and down, the low angles of the different indicators that we have. Power blue, white, and pink are all in low angles down. I should say power blue is in a low angle up, and white and yellow, and pink happens to be barely down. Pink is going to be equal, I bet, minus 126 and 126. So they're both minus 126. Power pink is equal. Remember, when you have an equal indicator, it can be used to your advantage for either direction. So what I'm trying to say there is that you could say power pink is up, even though if you go like this, I'm going to expand this thing out, and you can see that power pink is down, even though it numerically is an identical number. I've just expanded it really strong to show you that difference. Okay, now when we go back and we look at it, if blue and pink were up and white and yellow are down, then we have a classic shape pattern divergent condition that oftentimes produces gaps. Those are paired gaps. Blue and pink would be up, white and yellow would be down. Pink in this case is equal. It is so close to being up, I would consider it to be qualified as being up, thereby generating a possible gap. If you were looking at this ahead of time, if you go over to the swing chart, you'll find in the swing chart yellow, gray, and blue are on top of the green line, and all of them are going down. So in other words, we're in a low angle down movement, and it's more important when they're on top of lines. For example, I would qualify the power blue line over here as being up against the line, even though it's in the other direction. It's just really close to it is what I'm trying to say. Same with the zip green over here. Zip green is at 57. That's a little higher than what we like to see. We normally like to see within 5 or 6 points of the, in this case, the 50 line for it to be qualified as a down touch, but it's above the down or above those 5 or 6, and obviously it gaps down the next day, and it's not a gap down for a upturn the next day. So the biggest thing that we see in this example is that we have all of the low angle down and low angle up indicators. Power blue, white, and pink, swing gray, blue, and yellow, and zip green are all in low angle downs. Zip Zion is actually also in a low angle down. And with all of those, that is very important. But let me emphasize the location of those low angles. They're all underneath. Those are usually post or peak indicators. Low angles on 2 days up is on a low angle peak. That's usually on a peak situation. And obviously, you can look at the peaks in the day after the peak in the price chart, the zip chart, and the swing Zion gives us a peak. It's one of those nose out over the top of swing red. And then, of course, trend red is highest and coming back down. So it's really on a peak, but the 3 power lines are all underneath power orange and green, and that in itself is a strong divergent move indicating the price is going to go down the next day. The other key thing that we have, and you've heard me, if you've listened at all to any other videos that have caught this idea, and that's the crossover idea. Yeah, I emphasize it in the power lines. When power red crosses over zero, you get an uptick in price. When it crosses under zero, you get an uptick going down. But in this case here, swing green has crossed underneath zero. And remember, if you don't, and this is the first time you're hearing it, when, for example, swing green is going down and it's above zero, it doesn't have as much power as when it's under zero and going down. And so the ability of the three groups of the swing trend lines to identify movement are stronger when those lines are going down and under zero. Also when, like for example, in the trend trio lines, the yellow, pink, blue, they are all traveling fairly flat under zero, which tells us that this is typically a downtrend scenario, even though the vertical green line is the third day of a rally. It's actually coming down on the third day, but it looks like it gapped up at the start of the day. And so they 2 or 3 day rally, however you look at it, ends up on the green vertical line day. Power green is at 0.07. It is almost under, and we know that very seldom do these heavy lines, the short-term trend lines, because they move so slow, because they're geared to turn slowly, can they move up quickly. And so it's heading down. It's likely to continue going down, which it does the next day. Excuse me. And so we expect power green to be under zero the next day, so that would give us a strong indication that this is going to be a strong down movement. And why do I say that? And that's because when I first looked at it, I saw all those low angle, either up or down in the power chart, while they were underneath the power orange and green. And then other things that accentuated the issue was the day before the vertical green line in the zip chart, we had zip pink highest. Remember, zip pink is your price barometer, or one of them. Swing Zion is the other price barometer, and then the 3 price lines in the price chart are also price barometers. And those 5 lines follow the price explicitly. That's what they do. That's what they're designed to do, and we watch them for that purpose. One other key element is in supporting evidence is here in the price chart. Red has crossed under green as it went to the vertical green line, and that, as you know, is a divergent move. Red could have stayed on top of the green line as it went down, but it actually crossed under the green line, making green highest on the vertical green line day. And so the other thing, zip green was highest, even though zip green is at 57. And there's something to it being highest. There's a lot of issues with lines being highest that sometimes we as traders, or you as as an individual looking at the DTVB system, don't realize the importance of lines being highest or lowest. And that's why I emphasize zip green highest here, because that's real typical. Because remember, if it's highest, all the other lines are already moving down. Which means what? Which means because zip green tracks the trades in and out of the stock, or tracks the buyers in and out of the stock, however you want to think of it, the market force pressure lines, those quicker lines, are already telling us that it's going down, and so zip green is highest, indicating it's going down. So that's why when we, even though it's not at 100, it is highest, and that's a contributing factor, or one more piece of supporting evidence that would tell us we're going to have a down move next day. So a lot of information in this particular gap down. In the end, that's what it's about. You can talk about one other thing that we find often is that zip Zion is highest in a gap up situation. And again, when you think about what it is, representing buyers in and out of the market. But keep in mind, zip Zion is the grandfather, so it moves slowly. So zip green is even under zip Zion, but zip Zion is highest, and now we have a gap up. So it's basically telling us that there's a lot of people in the market, and for whatever reason, the exchanges, the guys at the exchange decided to gap it up the next day. And obviously we know that's based on computer information, but decisions are verified by people. So a decision to gap something up is ultimately in the hands of a person. So that's what we've got here at DTVB for this particular situation, and that was in GGAL, in a really nice gap down situation, easily identified by the indicators.